Is your property portfolio really as profitable as you think? In today's video, I'm going to show you how calculating net operating income, NOI, can help you uncover the hidden cost eating your profit, whether you are into rental properties, flipping, or commercial real estate. This video is for you with a South African twist. I've been in the property game for over a decade, managing over 100 rental units and a 100 million rent portfolio. I've used NOI to grow my own portfolio, and I've helped others to do the same. This is essential for anyone serious about making smarter investment decisions. This video is for new investors looking to build a solid foundation, experienced investors looking to fine-tune their strategy, South African investors looking for local insights, and for anyone globally. These concepts will help you assess property performance in your own market no matter where you are located. Alright, let's break it down. What exactly is net operating income, or NOI? Simply, it's the money you make from your property after all operating expenses are deducted, but before you think about mortgages, taxes, or depreciation. NOI is crucial because it tells you whether your property is profitable or not. This is what investors look at when deciding if a property is worth holding onto or selling, whether it's renting, flipping, or handling a commercial property. Here's the thing, understanding NOI helps you avoid getting caught with your pants down. There's nothing worse than thinking you are making money only to find out that you are actually losing out because you didn't account for hidden cost. Trust me, knowing your NOI upfront could save you thousands. Up until now, you've learned what NOI is and why it's crucial. But the real magic happens when we break down the formula. That's where the rubber meets the road. Now that you understand what NOI is, let's break down the formula to make sure you've got all the key components in place. NOI equal revenue minus operating expenses. First, you need to consider revenue. This is the money you make if you are renting your property, or the income you make if you are flipping and selling. But here is the catch. Don't forget to account for vacancy loss. This is the money you lose when your property is empty. So don't just focus on the rent you are getting from tenants. Now on the expense side, you've got your operating expenses. That's maintenance, management fees, property taxes, insurance, and the like. But don't mix this up with your non-operating expenses like your mortgage payments, taxes, or depreciation. Those are important, but they come later. As you build your portfolio, it's crucial to track your NOI over time to spot trends. For example, if you notice a decrease in rental income because of vacancies, you can address that issue quickly so that it doesn't affect your overall profitability. Regularly tracking your NOI allows you to spot patterns, take actions faster, and stay ahead of potential problems. One way to boost your NOI is to cut out unnecessary operating expenses. For example, negotiate better rates with your property management service, or find more cost-effective contractors for maintenance. Small changes like this can significantly improve your NOI and increase your overall profitability. Now that we've broken down the formula, let's move into the real-world example so that you can see exactly how it works in practice. I'll walk you through NOI for 3 types of properties: a rental, a flipped property, and a commercial property. Imagine you've got a rental property in Johannesburg. You earn 10,000 rand a month in rent. But hold on, you've got 2,000 rand for management fees, 1,000 rand for maintenance, and another 1,000 rand for insurance and taxes. You do the math. 10,000 rand minus 4,000 rand equal an NOI of 6,000 rand a month. Now let's talk about flipping. Let's say you bought a house for 800,000 rand and 100,000 rand on renovations. If you sell it for 1.2 million rand, you are looking at an NOI of 300,000 rand. But don't forget the cost of selling and holding the property. That's how you calculate if it's worth it. Now, for commercial properties, this can be huge. Let's say you've bought a building in Cape Town. You earn rental income from different tenants. Let's say 50,000 rent a month. But don't forget to deduct your property management fees, repairs, and maintenance. That will leave you with an NOI of 35,000 rand. Now, let me show you how to use NOI for investment decisions. Once you calculate NOI, you can use it to compare different properties. For instance, let's say property A has an NOI of 10,000 rand and property B has an NOI of 5,000 rand. Property A is clearly a better performer in terms of profitability. But don't forget to also consider other factors like location, market trends, and future growth potential. This will influence your long-term returns and your overall investment strategy. If you are serious about property investing and want to take your property investment to the next level, I invite you to WhatsApp Teach Me to +2760 731 4018 to book my free consultation. Together, we'll go over your investment strategy and help you maximize your profits. Let me show you how NOI plays a major role when it comes to financing and leveraging your investment. Lenders often use NOI to evaluate the financial health of your property. The higher your NOI, the more attractive your property will be to lenders. Keep your NOI high by reducing vacancies and maintaining your property well. By keeping a solid NOI, you will not only be able to secure better financing deals, but you also have the ability to leverage your property for additional investment. A strong NOI can open doors to further opportunities and help you scale your property portfolio. Now, let's talk about external factors that can influence your NOI and your overall profitability of your property investment. Keep in mind that factors like inflation, interest rate, and market trends can affect your operating expenses. For example, if interest rates rise, your financing cost may go up, which directly impacts your NOI. It's important to keep your eye on these factors because they can influence your NOI over time. If you are not prepared for this shift in the market, these changes can eat into your profit margins and potentially even turn a positive NOI to a negative one. Always stay informed with economic conditions and market trends. They will help you make smarter decisions in the long run. If you want to dive deeper into your property investment strategy, book my free consultation today. I will help you create a plan that will take your property portfolio to the next level. Now, let me show you where many investors go wrong. These mistakes will cost you thousands if you are not careful. So, stick with me as we dive into the biggest mistakes you need to avoid. Here is where a lot of investors mess up. Don't mix up your NOI with your cash flow. Don't factor in things like mortgage payment or taxes. Those come in after your NOI calculation. Another mistake, vacancy loss. If your property sits empty for a few months, that's not income. Don't ignore those gaps when calculating your NOI. Lastly, make sure you are excluding your non-operating expenses. These are things like depreciation, loan interest, and income taxes. None of that goes into your NOI. Keep it simple. But now, what's your biggest challenge with NOI? Drop your comment below and let's dig into this together. So here's a quick key takeaways and benefit for boosting your NOI. Now, I want to hear from you. Drop a comment below and let me know which type of property investment are you most interested in. Is it rental properties, flipping, or commercial real estate? If this helped you, don't forget to like, share, and tag a friend who needs to level up their property investments. If you are ready to take your property investment to the next level, I invite you to WhatsApp Teach Me to +2760 731 4018 to book my free consultation. Together, we'll go over your investment strategy and help you maximize your profits. Stay tuned for my next video on how to do joint property ownership. This is a very powerful strategy to grow your property portfolio. Be a legacy builder. See you in the next video. Peace.